Hello, everyone. Welcome to ELI, the only podcast in India where we bring a new industry leader and entrepreneur on every episode to talk about their journey and their story of building a global company. And today we have with us Vineet Tagi, who is the Global CTO at Biz2X, which is an end-to-end loan origination and management platform built for financial institutions. Hi, Vineet. Welcome to ELI.
Thank you, Priya, and I'm delighted to be a part of the ELI podcast. And congratulations to the you and the team who has built such a wonderful platform.
Thank you, Vineet. And it's our pleasure to have you on our platform. To start with, would love to hear about your journey first. Tell us a bit about what kind of work have you done over the years. I think this is not your first stint as a CTO. You've led the technology function at other companies as well. So tell us about your whole journey.
Yeah, so my career has mostly been about, in a nutshell, building scalable systems and businesses which are tech led, right? Mostly global, enabling innovation in fintech and AI. So if I were to recall my journey, I would say that I kind of professionally started my career in a time when access to technology in India was limited.
Mm,
So my journey predominantly has been about, how do you work with constraints, how you break the barriers with technology and create newer business innovations. So from very early on working, I used to, work a lot in the US till 2006 before I relocated back to India. So, some innovations where I built large distributed systems, including one of the world's first shipping EDI, digital systems that handle global scale, shipping information for one of the world's largest container shipping company to building high scale financial platforms. Once I relocated back to India, I had the privilege to, scale businesses and build, businesses with technology.
mhm,
Today at Biz2X, my focus is on building technology that just doesn't process transactions, so to say, lending transactions, but creating access, to SMEs, especially the underserved ones.
mhm.
And as I've worked more in this industry, more with SMEs and Indian SMEs, directly and indirectly, I've realized that what we are doing is not just along with my team, although we do write a lot of code and that's how we create systems,
Mm.
but eventually the goal is not just writing the code or putting it in production. I think it has to be about, for us at least, it has been, and personally for me, the transformation has been that code is creating possibilities for SMEs, right? Possibly that working capital loan that we somehow enable the data on a SME who's not getting the loan and make him get that loan, explain it for him, transforms his business and the lives associated with that. So that really becomes exciting for me and gives us a purpose.
Got it. Uh, So your target customer is SMBs. Can you tell us a bit about what are these customers thinking about in terms of credit and loan? What are their priorities? How do they navigate through the whole credit ecosystem of India? Where, whom do they reach out to for accessing credit? What kind of documentation and everything they have to submit? So the entire journey, how do they navigate through the credit ecosystem?
Well, I mean, if you talk about the Indian SME, right? I just wanted to share, when I was learning about them and why the challenges exist, because India has a huge banking sector. It's not that we had a banking sector which is didn't exist or was not there from a reach perspective.
Mm,
So one of the key statistics that stands out for me is that if you are a developing or on the cusp of becoming a developed economy, at least 30% worth of your GDP. So if you have a GDP of let's say $1 trillion, then about $300 billion of that figure should be going towards as credit to SMEs to support that. So it's literally a feedback loop that supports the future growth of the SMEs. In India, that number is not even close to 30%. That number is 8 or 9%, right? So where does the SME get support from? And that's especially if you go down to the tier two, tier three, tier four, beyond the metros,
Mhm.
the Bharat that is being called today, the Bharat SMEs, they have to rely on a lot of private credit, right? There are, banks in their cities. The banking sector is there, but it's very difficult for banks to underwrite them, and hence they are not able to give access to credit for these SMEs. Um, so there's been a tough thing. Other learning and what defines these SMEs is, uh, it sounds contradictory, but why do they go to private credit and pay high rates? Because it's the timeliness. So
Mhm.
even if the bank can give them credit, it takes 10, 15, 14 days, 3 weeks sometimes to see the access to the money. So that's the second learning for us, that has been that SMEs, especially in Indian context and even worldwide, value access to money more than they access the cost of money.
Mhm.
So they would rather see it. So it becomes a problem of turnaround time. How fast can you give them the credit? Thirdly, if you go down to the tier two, tier three, tier four, five cities where there's a lot of SME growth, what is happening is, while there is a lot of digital penetration, everybody now uses mobile phone and everything. There is a lack of financial education, so they really don't understand beyond consuming the entertaining aspects of the mobile phone or maybe the basic banking, the UPI, etc. They don't really understand credit bureaus. They don't understand the value of that. They don't understand the documents being requested from that, right?
Mhm.
And they're not being very financially responsible because of lack of that education as well. Um, Fourthly, what we have also seen is banks and the banking, traditional banking sector has been backward looking from underwriting perspective.
Mhm.
And what that means is that what I mean to say there, it's not that they're not profitable, like they're not a sustainable business, but they invest a lot of money back into their growth because they're at the growth stage. So they wouldn't be keeping or declaring profits. They're rather reinvesting everything that they save back into the business for the growth. So
Mhm.
all growth stage SMEs hence are not able to fulfill that criteria of what the banks try to underwrite for. So you have need separate models, separate cash flow analysis driven, scorecards and other ways to underwrite these customers. And even the loan product structure has to be different to address this market.
Mhm.
So in terms of what our learning has been, I would say these are the four key areas of the learning and the distinction we've seen and I've seen in the Indian SME.
Got it. One interesting aspect of this is the term you mentioned, time to credit, or the turnaround time for when you apply for a loan, and the time it takes to get processed and get credited to the account. I think that particular segment has seen a lot of innovation when you talk about the retail credit consumers. Uh, Lot of digital apps have come up which can instantly give you the loan within 5 minutes or so. But why is that innovation not happening in SMB front? Because there is a lot of digitization happening. Why is this particular segment ignored?
That's a good question, Priya. I think that befundles almost everybody. That India is so rich in digital data today, especially with people and their behaviors and the bureau and everything. So let's look at the retail side of credit. So if you look at retail or consumer credit side, the typical ticket sizes are smaller, few
Mm.
thousand rupees, maybe 50, 70,000, maybe up to a lakh. rupees. Um, Mostly the kind of underwriting that happens there is to understand the behavior of the customer. That you can do that by pulling the the TransUnion CIBIL score, and based on that, you can very well, take a decision. It's a very simple onboarding process, relatively simpler to underwrite and take quick decisions. So there is a lot of digital penetration that happened. Unfortunately, the sector has seen extremely high NPAs. The defaults that exist in small ticket personal loans are
Mhm.
some of the highest in the industry. They're double digits, and they're not very low double digits. They're
Right.
higher. There have been several, you know, um, fintechs and others who have scaled very rapidly. But see, lending is not a sprint. It's not just about handing out money. It's also about building that sustainable cycle of credit where there is responsibility to recover the money, there is responsibility to create that sustainable business. So it's not a sprint, it's a marathon,
Right.
right? So you have, in order to do that, you need a lot of ability to collect accurately, right?
Mm.
And manage your NPS. And I think that has been a huge problematic aspect in India. The digitization in India doesn't support a lot of heavy collection. So what happens is that instead of spending 30,000 on collecting 25,000 rupees, most of these fintechs would say, okay, I will just write it off,
Mhm.
right? And that just creates the whole business model to be very unsustainable. On the SME side, if you were to scale this up, the ticket sizes are larger,
Mm.
right? And the data that you need to decide, because you're underwriting the business, they're not an individual, is very different. And
Mm.
many of the cases, the commercial bureau, the side of, where the SME as a business has a credit file, either has no file, zero entries, or there is, very thin file. So banks and fintechs have to resort to using alternative data sets. So banking, data has been a area where people have started using that. GST has been another area that GST and banking data together is helping a lot of that digitization. Um, the issue with that is that in the smaller sector, the MSME sector, especially the micro and the small part of it, there is a blur between the business and the personal account. So your personal account is your business account, and your business account is your personal account. So
Mm.
very difficult to then apply these techniques to figure out what personal transactions are, where somebody might have taken a loan. So that becomes a challenge, right? So these are some of the challenges which are limiting the SME scale. Uh, the fact that there are larger ticket sizes, so people have to be careful. You can't, you can write off a 5,000, 10,000 rupee loan, but you can't write off a 5 lakh rupee loan, 3 lakh rupee loan. It adds up very quickly, wipes out the whole book. Then there is no cycle of credit that can, feed the growth. So
Mm.
that has been the number one challenge. And I think uh, that is what we have tried to solve for and have solved at Biz2X. During your introduction, you mentioned that we built the LOS and the LMS and the full lending stack. But I just wanted to also add to that we are also one of the world's largest digital fintech lenders in the US. Although we don't lend in the Indian market currently, but in the US, we are one of the largest SME lenders. So we are also an active lender to the SMEs. We have lent close to $15 billion to the SMEs in the US. So we also have a lot of data and the behaviors that we use to understand and create digital kind of AI models that can underwrite SME behaviors much more better. Our NPAs and our business have been under 2%, under even in times of COVID. So we are in very low single digit NPAs, and we have had a stellar record of servicing our customers as well.
Got it. You spoke about the concept of data to decide, like when SMEs come to you for a loan, they have a file, and sometimes the file is not good enough to decide whether they're worthy of the credit or not, and you rely on the alternate data. Can you expand on that? Like, what sort of data sources do you look at? How do you probably know? Because alternate data is sometimes not reliable. You cannot judge. Let's say your alternate data is the cash flow and the number of messages coming to your phone about this much credited, this much debited, the banking transaction message that can be an alternate data source. But then you have to build a model on top of that to reliably decide whether somebody is a reliable, credit-worthy customer or not. How do you decide that? What kind of data points do you consume, and how do you decide that?
Yeah, that's a good question. So, for India, we integrate with hundreds of data sources. Some are traditionally well-known banking data, GST data. There are other alternative sources that are non-traditional or non-linear, as it is called for in our industry. So we look at even Google ratings, Google reviews, social data, billing data,
Mm.
employment data. We also use techniques of computer vision, image analysis, of photographs taken on, by the customer of what they're claiming to be their business. So a lot of such data sources, and I can take an example, for example, the limitation of extending credit to somebody, let's say, in a tier 3 city, like let's say Barabanki, or someplace else, comparable, Roorkee, 300, 400,000 people, living in that town or city, has access to banking, has access to good data, bandwidth, etc. But what is the problem there is that addresses, these have been traditional towns. So there is no postal address marking which is consistent, which is logical and other. Although the India Post has created a new algorithm and a new, type of coding that can uniquely identify any address and is very consistent. But still, the older addresses have not been like that. Now, people have said, well, you can use lat long, and you can capture the mobile location and you can read all of that. But that doesn't really tell you, I could be at the location, I can take my phone there and stay there for, you know, uh, 24 hours and try to game the system. So in that case, how do you really determine that if there is a restaurant in Barapanki and he's wanting credit to extend his restaurant? Maybe he's claiming that I want to add 10 I want to create a 10 seat more bigger facility and put ACs, and you know so from the bank statement I can see his revenues, right? I can see the growth is there typically. I could go to Google, and trust me, in even tier 3, 4 cities, there's a lot of Swiggy, Zomato that happens now.
Yeah.
Um, so we can see that data, alternate data. Literally, approximately 30-40% of a good restaurant's ordering is happening, even more sometimes, 50% is happening. Their revenues are coming from, online platforms. Um, so now, how do I really, close this loop and say he is what he is? He will use this money for what he's trying to say. Um, I think that substitute today is people visiting them. Somebody either outsourced from the bank or the fintech, they would have a person, a field agent who would go visit, take photographs, and write the report and submit it back. It adds at least minimum 72 hours to the process. B, that's where most of the collusion fraud happens,
Mhm.
right? So what we ended up creating and the kind of data that we ended up using is, they say, okay, why don't we rely on the customer himself? Now, if we rely on the customer himself and give him a mobile app, where we can ask him or guide him, our underwriting engine can guide him to do certain activities.
Mhm.
How do I make sure that then the what's happening, the images and the data that's coming back is reliable? So we created this AI model where it looks at the application data. For example, it would determine that this is a restaurant. Okay, fine. Show me your, signboard. So somebody would take the photograph, through his mobile phone. So obviously, what can be gamed or what can be, fraud here is that he's taken this photograph at a location which is not his, and he's just claiming it to me. So obviously the correlation with geotagging can help us, eliminate that. Now, by auto reading this, by computer vision, by AI, what's written on that on that board, enables us to, have fast access. So the engine immediately decides that, yeah, this is the name that matches, or at least this is the business that was mentioned. The actual, impressive part happens is that where we can say, okay, show me the seating area of your restaurant currently.
Mhm.
And using AI, we can count the number of table chairs that are there. It's a very simple thing today.
Mm.
Can calculate a rough estimate of dimensions of that area, right? So I can keep talking about, things like this, but these are the kind of, thought processes and actual tech that we have deployed at scale that enables some of these, SMEs to, get faster access to credit. We eliminate that, you know, 3-4 days straight away from the process without, creating any ability or enhanced fraud in the system.
Understood. This is interesting because AI agents, I think that's one of your latest offerings, agentic AI. It's pretty good at, going through multiple data sources and giving weightages to that. Let's say, for example, you find out that people with 4-star or above rating, they tend to pay back the loans more than the other with ratings below 4. Just giving examples. But yeah, AI is pretty good at identifying these patterns, and it also improves over time. Let's say you use AI to underwrite a loan, and after a while, you also feed in how much of that loan also got paid back. That's how AI will improve over time, understanding the patterns, and in future becoming more accurate. Can
Yeah.
you give examples of how you have been leveraging AI, agentic AI in particular, in all of your processes?
Yeah. So yeah, I mean, so what we have done is that, at Biz2X, my job is to make sure that, we are using, technology to really, really expand, the accuracy, the credit worthiness, reduce the time to credit, and, create more efficiencies for that process in general.
Mhm.
So if I were to look at where AI exists for today, for us in Biz2X platform, I would say it's quite ubiquitous. It exists right from the time when somebody is assisting the customer. Indian SMEs, especially in the Bharat, tier three onwards, need a lot of assistance. They can't fill applications themselves. That application has to include a lot of details, and the person who's assisting them himself may not be an expert in the credit policy and everything about the product and everything. So they also need to be almost 100% accurate in answering or being very transparent about what can be done, what cannot be done. So right from that assistance level, we have the bot that this person who's assisting the customer fill his application. If there is a question that comes up from either the customer or for this person to help understand how to respond to the customer or how to fill the application or what kind of data to use, we
Mhm.
have a bot that proactively kind of assists him. So we literally call it the wingman strategy, right? So our bot is a wingman. So be it any persona, either assisting the customer or the underwriter working on underwriting the file, or the person who is disbursing the loan and helping him get the money to his bank account. All of them have a wingman, a junior persona, who is the bot who has access to all the data, knows all the answers, and can help him be more efficient. So that's the strategy that we have taken. And especially in underwriting, it's almost like a junior underwriter that the underwriter has. And instead of reviewing everything and doing the calculations and figuring out all the financial data is correct, which also takes time, sometimes a good underwriter underwriter might take 3-4 hours of, or sometimes even a full day to underwrite the
Right.
application. So it's really that bot is a junior underwriter that's helping the person pre-analyze. The underwriter then just has to see the pre-analyzed work, and he can apply his experience in spotting whatever he needs to spot.
Mhm.
We've seen about 80% uplift in underwriters efficiency in that. That directly translates to faster time to credit, because that's for the customer, the SME, that's what really matters. So I can tell you more examples about how we built algorithms to, even distinct personal. So I told you about that, the in the smaller MSME, the personal account is your business account, is your, it's all mismatched.
Mhm.
So you have an AI algorithm that can help create and distinct these transactions out and help take accurate guess as what might be the business revenue from this and what might be the personal side of expenses and incomes for this SMEs. These are some of the few things I can just at the top of my head mention.
Got it. You spoke about this combination of AI agents and human underwriters. It's a combination of AI with the human in the loop. And I think similar thing is happening across every industry. And one major trend which has emerged because of that is fintechs and banks are now, uh, creating this process of fintech GCCs, which are, using countries like India as a GCC center or as a center of digital excellence to kind of outsource the complete operation, becoming lean as a financial institution. And a lot is happening in that front. What has been your observation around that?
You mentioned GCCs.
Yeah.
Yeah. So no, I mean that is true. Globally, that is happening, and even I mentioned that Biz2X's is a lender in US. So we are also GCC. We're based out of India. A lot of that lending support happens from India. The underwriting happens. So we ourselves are a GCC. In fact, we have more people in our GCC than we have in our headquarters for the lending Biz2X in US.
Hmm.
Um, that is a growth segment, absolutely. And what is also happening with the GCC growth is that um, the access to the mindset and the problem solving that we are doing for SMEs across the globe.
Hmm.
So we have built solutions sitting in India that work for SMEs in the UAE, that work for SMEs in the KSA, that work for SMEs in Australia, in Canada, in India. So that creates a great opportunity for cross leveraging some of that and cross pollination of exercises. There are things that we have done for Indian SMEs and what we have learned from the Indian SME behavior that is also being used to create better experiences for SMEs in other countries as well. So that's number one thing that happens, that when these GCCs are there, there's a lot of global learning at scale that can be transferred very quickly and very rapidly without having a proper, I would say, a structure or a initiative to do that. Right? It just happens by natural cross pollination. The second thing in the GCCs that we are seeing, at least from my experience, that is happening is that India has a lot of, uh, I would say, a digital leapfrog in terms of data, especially on the onboarding side, on the front end side. That is creating a lot of innovation also, an ability to innovate
Hmm.
also. So GCCs are hence becoming a hub of innovation. They're
Got it.
not just a back office for cost arbitrage. They're most for us. Our GCC is a hub of innovation for us. We're not just because we are a lower cost location, and it's not just that. Of course, there are cost efficiencies as well, but the predominant thing is the innovation that is happening. We have a lot of young population. Number three
Hmm.
in India, and that young population, many of them have grown up in the digital day and age, so they are very digital native,
Right.
and their mindset is very different. for digital natives. So they think digital first. They can build digital first user experiences. So that also for a GCC we are seeing as a lot of strength here.
Understood. And here is my final question before we close. Looking at the future, what do you see as the major trends or technologies that you believe will mostly will be the most significantly impact the future of lending and financial institution? Which of the technologies that you see foresee will going to change the game for every financial institution out there?
It's a good question, but I'll just share my opinion. And I wouldn't say I'll be right, but at a high level, I'm not going to go down to which technology or Python or this or that. But just specific to lending, I would say that, look, India has a lot of data pipelines, real-time data pipelines. The plumbing that we have created because of this, this leapfrog that we had. So we moved from a fixed phone, copper line driven telephony, which was very sparse, to a magical mobile wireless, access that has penetrated deeply and widely across the population. Our behaviors have changed. Large part of our population is digital native today.
Right.
So the real time data that we have access to, for me, is, I would say, as technology aspect to it, is the aspect that how do you access and utilize this data. There are data sets that exist that people don't know about. I can tell you that the government has digitized a lot of data sets which are available. There, a lot of people don't even know there's an initiative called data.gov.in,
Mm.
where a lot of government data is published. These are thousands of data sets, right, from census, sectoral data, and whatnot, which is freely available, right? So one is having access to this real-time data and utilizing it more. The second for me is embedded finance. And when I say embedded finance, right now, what we do is we apply for finance. An SME needs credit, so he would try to, either assist it or himself apply for credit. The shift has to happen is that in a transaction, finance has to be embedded in his need wherever he's doing. Like he wants to procure material, that has to be, embedded. Finance has to embed it. So in his ecosystem of what he's doing for his business, the embedded finance is the key. Embedding finance in every of these transactions is the key to SME growth. So literally like a B2B BNPL, like a buy and now pay later, that is understanding of his business, where he buys from, who he pays, when he receives, all of that digitally happens. And embedded finance requires very different mindset and, user experience to happen, and to be built and delivered. So that's the second thing. And of course, agentic AI and AI will increasingly play a bigger role in transforming all of this financing, because see, it's literally impossible for an embedded finance ecosystem to work. Underwriter cannot examine what's happening in real time. What need does he have? It has to be an AI, human assisted AI that takes care of that. So for me, I would say that these three things lining up should make lending invisible. It should not be visible. It should be that thing that is invisible. And for me, invisible lending has to be embedded, real time, and AI.
Like at every spot of transaction, if somebody is buying a mobile phone, then the shop also should have the financing option. Just a very simple.
The retail side, you already see that. You want to buy AC, they'll say, "Sir, give me your PAN. I will get you on EMI." The same thing that embedded finance on the SME side. The moment we achieve it, that invisibleness, I think that has to come from real-time data pipes, the AI, and the embedded finance ability.
Absolutely. All right. On this note, we will close the session. Thanks for joining us, Vineet. Pleasure speaking with you. And I think the work you are doing is really enabling SMBs to get loans faster and use it in a more effective way without going through a lot of intermediaries and without waiting a lot of time to get the access to credit. Thanks to you, Vineet, and kudos to you.
Thank you, Priya, for having me and doing a great work along with your team to share all these great ideas with the world. Looking forward.
Thank you. Thank you, Vineet.
Thank you.